Hey traders, welcome back to another trades review. So lately I've been focusing a lot on trades review because we got plenty of them, and yeah, I just want to help all of you, especially for those if you're here for a longer term. Just want to help as much as possible. Since market's been slow, you see yesterday we missed out by literally like 1 to 2 pips. Market's been slow. I would much rather spend more time with all of you, just trying to make sure we all improve together. So for this trader, if you look at the overall performance, win rate wise, 1 2 3 4 5 6, so 14 trades, 4 win. So let me do the math a little bit. So for win rate definitely could have been improved, but it's okay because sometimes we got into losing streaks. So because sometimes we got less favorable market condition, so that could lead to a lower win rate. So it doesn't really matter. Just want to see the overall risk draw. Overall risk draw could be improved as well. If you look at the performance, right? You see when he wins 1.35, 1.3, 0.88, and one thing that I can immediately scan through is the amount of yens that this trader trade. You see, so took 2 EA loss here, 2 EA loss, and you see EJ, so 4 EJ here. I'll tell you, when you see 4 same pair appearing, you immediately know that 2 losses could have been improved, and definitely it was overtrading. So let's have a look on 3rd of September. Short-term bullish on UJ. OTE technically means just like a sweet spot. That's it. For some of you who don't know. Yep, very clean price action. Daily chart on dollar yen, it was still bearish. And one thing that I would still like to remind all of you, if you're watching this, is if the market is still overall trending bearish, try to find place that just try to find setup that goes with the trend. You see, the way that I read UJ is we got a heavy sell, massive sell off. That's a bad flag, a continuation to the downside. At that point, even for myself, I was anticipating some pullback into 152, but price didn't. So when price didn't pull back deep and it continued dropping lower, what does that mean? Lots of passive sellers, lots of selling pressure. Then price sort of did a break above this 146.3, probably 146.3 zone. Then this trader was looking for BNR. It wasn't wrong. The setup actually wasn't wrong, because this trader, he was mainly looking at a break, short-term strength breaking above this 146.30 zone, but price ended up continue pushing lower. And yeah, I just feel like the setup actually wasn't bad. It's just against the overall direction of the market, and guess what? Price eventually go a lot lower. So that's something that you all have to understand, is if the overall trend is bearish and you are already seeing that much selling pressure, if you go back onto dollar yen, onto the 1 hour, so you can actually look for a potential continuation to the downside. If you look at the price action, the ideal entry will probably be here because it will be a TPF, but price didn't, right? But after you see price did this, you see we have a resistance on the left as well. See this area? Quite a significant structure on the 1 hour. 1 2 3 4 5 6 7, so 7 touches. When you see price breaks back under the low, under this support, sorry, you can actually look for a potential short to the downside. If I fail to capture this one, here goes another BNR. Again, all of these are hindsight speaking, but the price action is actually pretty clean. Aggressive sell, just stick to the sell. So the next one will be pound dollar. It was a loss. Placement. Here comes another problem. We don't even have to go into it. I think it was a loss. the overall direction of the market, it was still bullish. It was bullish. If you look at the daily, overall trending bullish. Price did a shallow pullback, retesting this 131.24. So when you see such a shallow pullback, retesting the key level, you go back to the GU, look at the daily. Where was it? Let me see. I think it was here, right? It was here. So when you see, although price eventually came lower, but you would have easily hit your TP as well. See, shallow pullback, retesting the price structure, and we expect a continuation to the upside. So in fact that you know that price was on a major uptrend and you went short, it was against the rule. It wasn't wrong, but it becomes a mean reversion setup. And the second thing to assess, why did I not talk about shorting GU? It was because look at the sort of the rollover here. Yeah, so price was slowly rolling over with multiple exhaustion signal. So price tried to push lower, exhaust, push lower, exhaust, and you look at the angle of the pullback, very healthy. So when you see a downtrend that goes like this with a very shallow angle, you pretty much already know it's on a buyer's market, because buyers are accumulating, and eventually it goes higher. And that's one of the reasons why I keep saying that if you want to trade, go long. Although price eventually came back, but it's still there. Okay, actually GU hasn't been moving much, probably waiting for the FOMC maybe, but we are still there. All right, so this is something that you can perhaps think about it a little bit. If the overall trend is bullish, why not stick to the buy? Because market has already presented multiple days of pullback, which gives you a value area. Okay, so this one, yep, going short is okay. This is something that I'll personally go short. Is it I took the same trade? Probably I took the same trade as well. Yep. So the setup was actually very simple. Even myself, I took a loss. So price had a massive failure on the upside. We have some follow through, nice rejection here at 166, just say 166.80, and a continuation to the downside. Lower high printed, continue selling off, pull back into this nice breakout structure area here, and market just didn't have any sort of follow through. Alright, so yeah, it was a setup that even for myself, I find it very good. So nothing much to discuss. Move on to this one. Here goes. And that is something that I always say, you have to manage your re-entry better. So you take a loss there, and right after that, you try to look for a second re-entry, and end up price just didn't go anywhere. Yeah, took another loss, and this one, another loss. So one thing that we could have improved here together is to really have a proper set of criteria on managing your re-entry. Because when you took 3 losses like that, 0.8, -1, -1, you're essentially risking 3x your usual risk amount. Why? Because all of them were what? First thing, close price range. They are very close to each other in terms of price level. Second thing, they are all same thesis. Right? All of them are just basically looking to sell off, looking to short the market. So when you did 3 positions like that, it's very dangerous. Why? Because you are tripling your risk, and yeah, sometimes we can be caught being too biased as well. And that's one thing that I always tell all of you, like dollar cat. Perhaps if you look at dollar cat right now, I took 1 BE and 1 losses here on dollar cat. If I were to blindly continue shorting and shorting and shorting, I would have taken 3 to 4 losses. Why did I step back? It wasn't because I'm not confident on the setup, but mainly because I know I need to walk away to protect the downside. Because if I keep doing the same thing, I'm going to expose more risk. That's it. So something you can look at. So how do you manage a re-entry? We had a few lessons on this. Let's say today if you're looking to short something at $1, all right, so you're looking to short a double top, and you short it here and you get stopped out. Assuming you short it there, you get stopped out. Price does this. So you're not allowed to re-enter a short until you see price comes back. Or if you even want to be stricter, you just say, hey, I'm not looking to go short until I see price breaking the following structure. Then I'm allowed to go short. Why do I do this? Why do I set up this kind of rule or criteria? It's to ensure I don't revenge trade the market. I'm not being too biased on one specific direction. Second thing is it will significantly improve my strike rate. So that is something you can perhaps look into as well. So overtrading is still bullish. Is it long? Okay. That was tricky. Okay. So just now earlier I said you should have gone long. On this case, you actually shouldn't trade. Why? Because when market did a massive rally, pull back, a continuation, and it failed, that tells you that we're not ready to go up. And in fact, in the short term, you can perhaps look to sell this. All right. But again, for me personally, I much prefer just to not trade, because market is just telling you, hey, we're not ready, we are messy, we're probably going to range, we're probably going to consolidate for a little bit. So it's all about setting up criteria and applying logical sense into your trading as well. So move on, a nice continuation. Yep, this probably is a win if it's a short. Yep, so that was a beautiful setup. That was something that I also talked about in our community. We got a clear downtrend, so lower high, clean sell off, break of the structure, and a continuation to the downside. So very nice setup, you see. But one thing is added a little bit too heavy. See multiple positions, a little too heavy, but it's good. At least you close the trade in profit. Move on to EJ. I think the main reason why you took 4 losses here was probably because you were too confident that because you took 2 wins on the yens. So that's one of the reasons why you took multiple losses there. But yeah, this one is not actually a TPF. Why? Because when you're trying to trade a TPF, the market has to be showing a clear pattern, a clear structure. If you look at this one, what's this called? A period of consolidation. It was a choppy market, it was ranging. So what you technically should be doing is, you see, if price goes sideways like this and you start seeing price roll over, you can actually look for a short-term long to the upside. Right, you can actually look for a short-term buy here on a break and a retest, and then see how price react to the resistance. If price reject the resistance, you can reshort. All right, because if you look at the price action, I believe this thing probably bounced off the price structure and continue pushing higher. Let me see. Oh no, it ended up being a winner. So I was wrong. On this. This isn't something that I would normally take, because price action wise still looks a little messy. Even if I look at this one, downtrend wasn't too obvious, although we got clear low high established, but to short that, to me, is just a little bit price position wise not as good. But yeah, turned out being a winner. That means my view was actually wrong. All right, continue pushing lower. Very beautiful. Yeah, and I love the way how aggressive this trader is. Look at the way he added multiple positions into it. Move on to here. Anticipating a false break, reversal. Yep. Okay, very nice. US. Yep. US 500. Yep. Good management. So the setup was actually beautiful. That's a very textbook style TPF that we teach. Beautiful TPF, just no follow through. So setups that has no follow through is not our fault, because it's just the probability game. Yep, another solid setup. That was something that I took a loss as well, I think. Stop loss wise, probably a little too tight. Yeah, because you were focusing on the lower time frame. But let me have a look again. My comment was your thesis was actually pretty good. It was actually very clean, as you were expecting a continuation to the downside. This kind of setup, right? This kind of a massive key level rejection, break of structure, this kind of setup offers a very high strike rate, a very high success rate. But there will still be time where it doesn't work, just like this one. It didn't work. It's not your problem, so that's not something that you have to improve or correct. So EJ, too aggressive. Again, I can just say is, to me, it's a little too aggressive. But anyhow, you still made 1R. So why do I say it's too aggressive? Because your price position was way too low. Market was dropping, and you were technically trying to chase the final wave. Even though you make money on this, but it doesn't mean it was the right thing to do. So what the right thing to do would have always been, you wait for a deeper retracement, you short at a value area. Because as a trader, if you really see trading as a business in a whole, you just want to do things at a better price. And sometimes when you see a price action do this, just keep dropping, and you try to chase a low like that, there'll be times where it just sweep all the way up, do a really deep pullback. So that's not something that you see. Price eventually still reversed back up. So took a win on EJ, and then goes to another EJ. So here goes overtraded a little bit. Yeah, definitely overtraded. Yeah, you see another entry, another entry, another entry. Yeah, so what I can say is these three positions were just overtrading. Could have eliminated this 1.75 R loss, because you see, because after you, I'll just be frank, after you got lucky with this 1R trade, you psychologically believe that you will be correct later on, so you sort of overtraded a little bit. Yeah, just overtraded a little bit. Price position was, again, like what I say, it wasn't good, it was quite poor, and then you overtraded, and guess what? Market will always do this kind of thing, right? When you start overtrading, market will always punish us in a sense. Even for myself, last time when I overtrade or revenge trade, you'll be surprised to see how much money you can lose because you overtrade. So when you take a loss like that, when you take a win, and then don't be overconfident and then feel like, hey, market definitely has to continue pushing lower. Because if you go back to this trade, the price position wasn't the best to begin with. So what will be a better price position to go through? It could be here. See this? A little bit higher. Could be just simply say, I'm not going to trade EJ for the next 2 days or the next 1 week until I see price do a deeper retracement. Alright, that would actually make a lot more sense. So let's go into EJ and have a look. You see? Yeah, you see, price sometimes will just do a deeper retracement because it was just way too overstretched, and the level that I just discussed, price is actually right here and showing some rejection. Yeah, so that's a level that you can perhaps look at for this trader. All right, so again, it's not his fault. It's just that sometimes when we take a win, unconsciously we don't know it's a bad win. Bad wins basically mean you take a trade that's not really fitting your plan, but you somehow made 1R here, so that will sort of boost your confidence, then become overconfident, then you overtrade. So that's something that you can improve. So dollar CAD, similar to the trade call that I posted. Yeah, I took a loss on this. Yeah, even for myself, I was very confident that dollar CAD was going to drop. It just didn't drop, and it's still there. So it wasn't really our fault, right? We stuck to the plan. AU long, yeah. Yep, okay, good. So AU long, decent. But why break even? I'm not sure why you chose stops there. I was just about to say, after I see the following chart, you can actually just hold it. It's okay. It's okay to hold it if you are confident on your price position, because Aussie dollar, the spreads, slippage, everything are still fairly tight. So it's okay to actually hold on to it's actually okay to hold on to it, right? So that's pretty much it for the trades review, and I'll still say the foundation is there, and this trader definitely know how to trade. What I can say is the understanding of the pattern is pretty deep as well. Just managing overtrade. So two key things here. Managing overtrading, managing re-entry, focusing on price position. Yeah, that will be it. That will be it for this trader. Overall performance wise, still good. Although from here we can still see is on the negative side, negative 4.3, but it's almost there. Just have to fine tune a little bit. All right, I'll talk to you later. Bye bye.